Good morning, everyone. Welcome back. Hope everybody had a nice holiday weekend. Sometimes having that extra day off is just what a person needs. Okay, we just had the markets open, and they're still kind of moving sideways. Well, kind of sideways. It's actually been quite the roller coaster this morning. Let's take a look. So this is the NQ on the Hawk. And overall, we're sideways. You can see we haven't really committed one way or the other. However, there's been a big move lower and a big move higher. We're not recovering off of these buy signals. Now, this was a first micro-macro cross signal right here, which technically is a high probability signal. The problem with this first micro-macro cross, of course, is it came rather late, right? Normally, we see it print somewhere down here. So to cover that trade, we'd probably have to look at doing something like this. At any rate, the market did not hit our profit objective. And then we come out with the first micro-macro cross to the downside, which is also floundering. Not a good start to the day. Usually we expect these first micro-macro cross signals to have some sort of follow through. So I'm not too excited about getting on board just yet. Ooh, James says the tick is very lopsided to the downside, a negative 1100, which is very bearish. So a lot of people at the New York Stock Exchange shorting stocks today. And it is always tough when you come out of a 3-day weekend what to expect. Let's take a look here at the Raptor. The Raptor's kind of giving us a interesting look. We've got what appears to be almost like a bear flag going on. We'll see if it actually fails from there and heads lower. Or if it's going to continue to go sideways. Okay, look at this. The Falcon is going to produce a trend change signal. Oops, I could be a little bit late for that. We had an early trend change signal here. And now they've come back with a proper trend change signal. It looks like we're going to get a second push on this one. They've since retreated a little bit too far to worry about it. All right, I'm not going to worry about it at the moment. Let's take a look at, I'm also watching crude oil and soybeans this morning. Well, wait a minute before we leave the NQ entirely. All right, we did get that break here in the Raptor that we were watching. So we got that break to the downside. And let's see if we get a second chance to get in here on the Eagle. Oh, doggone it. Okay, let's let's get a sell order in here. They popped a little bit here below this low, And we really didn't get a chance to get this first micro macro cross signal here. I was just about to throw that signal on. This was a very nice follow through on this one here. So a nice little first micro macro cross. Developed just a touch too fast though. I was going to hit a sell order on something in a moment because everything was starting to unwind at the same time. And I was going to show you here on crude oil, we're also getting a macro pullback signal. Now this has since tripped a little bit. I'd probably look at doing the trade something like that. Ideally, I would have liked to have entered on the signal here, on the hash mark, because see how nicely this pulled back here? Straight pullback, no test of the extreme. That's a good time to try to take it on the hash mark because you know this market's going to try to test the extreme before reversing. So a potential signal there in crude oil as well. Okay, the NQ picking up a couple of orders here. You can see our Geiger counter turning a little bit green. So the buyers are buying up this support level here. This support that we just broke here, they're buying it up there and they're buying it up here. So somewhere through here, the sellers are going to have to step up and force this market lower. Seems very much like a selling day today. Don't quite have our macro pullback yet. We're floundering on this micro line. Might work itself into a 4-arrow consolidation. There we go. Now we've got the macro pullback. I'm going to hold my stops a little bit up here just in case they're not quite finished pulling back. So we've got now on our hawk, we do have a macro pullback and a 1, 2, 3 working on a 4-arrow consolidation. So we should see some selling pressure come here pretty soon. Okay, so there's our 4th arrow. So we would have sold from up here if you were watching the 4-arrow consolidation. 4-arrow consolidations, very powerful formations. Ooh, thanks, Jim. He says the advanced decline is even more lopsided now, negative 1400. So Still a lot of selling pressure on the market at the moment. We're getting trend signals now on the Eagle. So this is a full width trend signal. And we're getting signals to sell on the Raptor as well. So everybody is looking to sell. And with the Raptor, I'll just throw a sell order in. And I don't know why because my profit target is not 230 ticks. My first profit target. All right, let's fix that up. There we go. The auto scrolling, you have to remember, I forgot there, you have to remember to actually pull here on this axis so that your chart doesn't do one of these things when you try to bring your order back in. Okay, and I'm going to go with a swing high-low strategy here to start. And I don't intend to leave my stop here. I just want to leave my stop out of the way until I see that the sellers have control. When will the sellers have control? Well, once we get below these lows, I know the sellers will have control. Okay, so it's going to roll my stop anyhow. Let's disable that just for the moment. All I'm trying to do is I'm trying to avoid getting stopped out prematurely. I don't want the market to poke through here by one tick, which it would have just done here. It would have just poked above these highs by one tick, stopped me out for a loss. I don't want it to go just above here, turn, and then head lower. The buyer's really defending these lows down here. Okay, you see now how the sellers are coming in? I'm going to give them another bar. If this bar closes lower, then it will probably be time for me to roll my stop at least above this high here. See, but the sellers still haven't mustered 2 bars in a row. Okay, Jim's saying, can you throw a trend line on the 202 low? And go to the 605 low. This one right here. No, that's 604, 605. I think maybe Jim meant 625. Oh, no, he says that's it. Okay, just 1 second here, James, as I enable my stop strategy. Okay, and I've got the auto break even in play now. Okay, so here's what Jim is suggesting. He's saying, throw a trend line across these lows, and then you can look for the market to what he called a back kiss, which is actually a pretty good term. Whenever the market breaks a significant support or resistance area, whether it be a support line like this or a resistance line like this, or in this case a trend line, we can always anticipate the retest, right? We can expect that retest to happen. This one came up a little bit shallow, but the concept is still the same. Some of you might be seeing the retest like this off of this area here where we broke, retested, came down, actually did a double retest of it. I know it's very difficult, but it's important that you try not to panic when the market is retesting support or resistance areas or trying to get a handle on which way it wants to go. And believe me, I know it's easier said than done, but try to stay calm and try to get a handle on the price action the best that you can. So what I'm saying is we sold here, right? This was our sell signal. The market engaged our order, reacted to this resistance here, right? It rallied up a little bit, but I knew the sellers had to step in somewhere. See, this is why I'm always telling you don't strangle your trades. If I had run my stop according to the stop strategy, even though it's the swing high low and it's a very conservative strategy, well, actually it would have held me in, but just barely. It would have held me in by one tick. But a lot of times you'll see a trade through here just by a tick or two and then reverse. So you get stopped out for a loss before the market's even had a chance to make a profit. Somewhere in here, the market will show you that it will make a real effort to push prices lower. This, what's going on right now, this is not a real effort. One bar is not a real effort. Once the market starts going a little bit, okay, now this is a real effort. Do I know that the support will yield? No, I don't. But I do know that I have established resistance now, right? I've established a point where the sellers are interested in selling. Therefore, this would be a good spot to put my stops now, which is what I did. I rolled my stops down to here. In fact, you could be even more aggressive. I know there was a fellow in the room who bemoaned taking full hits all the time on his risk exposure. Well, this is the time that you can start rolling your stops down. You can start being more aggressive. Get that trade to break even quickly. Go bar for bar until you get a chance to get that trade down to break even. Or go with the bar high low, which is a much more aggressive stop strategy. This way, if there is another reaction to this support area and you do get stopped out, well, it's going to be a pittance compared to what your initial risk exposure was. Right? It's going to be anywhere from, say, a quarter to a half of what your initial investment might have been. And these are the kinds of things that you want to keep a lookout for. And like I said, you want to remain or try to remain as calm as possible. Try to, if you're having a hard time thinking clearly about it, well, you need more practice. And maybe you need to just set a stop strategy, something like the parabolics, and either sit on your hands or leave the room. I'm serious. because sometimes you can, well, you've seen me do it here, you can tweak yourself out of a perfectly good trade. When you're in a trade, really all we're looking for is who is in control of the market. Right now, the sellers are obviously in control of the market, which is why I've gone with the parabolics. I know the parabolics will hold me in as long as possible. If the market starts to reverse a little bit, the parabolics will tighten up very quickly. Likewise, the bar high-low is a very aggressive stop strategy, which will capture even more open profit than the parabolics. It's another good trade where we can even add to a position. You know, where you could start with a onesie and add positions as you go. Now we started with 2 contracts here. Let's see, look at that go. And as we near the top of the hour, thanks to Jim always beating into my head the first hour's high and low, we know that as the market gets closer to the top of the hour, we're probably going to see some support. So you may even just want to hit the close button. That may max you out. But at the moment, it looks like the stock indices across the board are in a bit of a tailspin, which isn't a real surprise. If you look at a daily and a weekly chart, this has been a long time coming. And the talking heads on TV, some of them I'm sure will be running around waving their hands in the air like Chicken Little saying the sky is falling, but really it's not. It's just a little profit taking reset, that's all. Okay, we're about to get tagged here, and it's currently 6:53, so 9:53 in the east. And a very nice way to start the morning. So how did we end up doing there? Well, that's all right. Nice little Raptor trade. We also capitalized on our Eagle, and the Eagle came back to our break even. Well, that was a little unfortunate, but worked out okay. And we hit our profit objective here on the Falcon. And did we have a hawk trade going too? Yes, we did. So a very good start to the day. Oh, thank you, Mark. Mark says, top of the hour, we've got a couple of important reports coming. New home sales and consumer confidence. So that could lead to a little bit of a bounce. Yeah, sometimes all you need to do to profit is hang in there long enough. I forget who the member in the room was, and if you're in the room this morning, you can remind me who you were or are. Said that what he did with the NASDAQ is he would just place an order, place as large a stop as he could afford, and leave it alone for the session. And more often than not, he would come back to a profit. Well, I have to say we handled this this morning very well. This was pretty much textbook. Well, my trading day is done. Thanks everybody for coming out. We'll see you again tomorrow. All right, well, just waiting for a little bit of a reaction here now. They have slowed somewhat. Okay, so it's not a real surprise that we saw some support come into the market after that rather large decline. Just looking for our next opportunity. We did have a macro pullback here that I debated doing something with, but it worked out. Let's see, was there enough room? Oh, there was actually enough room that you could have profited on a short-term test of the extreme, just in case the buyers were going to jump in here again. Richard's asking a good question. Richard asks, Eric, in your experience, is it better to look at initial balance level from 9 to 10 or 9:30 to 10:30? Well, Jim, one of the room members, actually developed this handy dandy a free little tool that you can pick up at the NinjaTrader website, or you can email me and I can pass it along as well. And Jim figured that the first half hour of trading is the most influential. And there's a lot to be said for that. You know, I've heard that before, that the commercial traders tend to get their positions on in about the first half hour. The markets tend to move in half hour swings anyways. So you get that first move in the first half hour, and then you get the reverse against the initial trend at the end of the second half hour. So somewhere around 7:30 Pacific, 10:30 Eastern, we might actually see a little bit of a rally. And then at the top of the next hour, so 8 o'clock Pacific, 11 a.m. Eastern, the market will tend to resume the trend again. Now, these are very loose rules. I'm not sure if it really matters what time to look for. The market makes it fairly obvious. So even if you were watching, say, from 6 a.m., which would be around here, to now, if we see a little bit of a hiccup here, you know, a few bars trading a little bit higher, it's going to be fairly obvious that this is kind of the initial range of the day. Fibonacci traders get all excited when they see this because they'll start throwing fib levels on here and saying, oh, okay, well, the market's got to, when it retraces 50%, then we'll be all overselling it. Yeah, okay. Whatever floats your boat. But I guess what I'm saying, Richard, is I don't think it matters so much whether you're a half hour early or a half hour late. The market will tend to show you quite plainly where the ranges are. So here, once again, even if you started at 6, which would be right about here, I suppose, without even looking at the clock, you can say, okay, well, there's the range, even though at 7 a.m. we stopped trading here. So this was on, what was that, the 21st was last Thursday. This would have been the first half hour trading, and this would have been the first hour and a half of trading. Anytime you put too fine a point on things in trading, something will come back and bite you. As I'm sure you know, you guys are no doubt aware, trading is not an exact science. That's why I used to follow Fibonacci levels and retracements more than I do now. And then it occurred to me it really doesn't matter whether the market retraces 38% or 50% or 62 or 75. None of that really matters. The market will show me when it's ready to keep going. And how does it show me? Well, I've got my signals, of course, and that macro pullback is looking better all the time. But we'll have things like, you know, a test. The market come down testing this support area, retesting, breaking out. This type of thing will tell me that the market is ready to go. But, you know, you'll have Fibonacci traders who will be getting into arguments with, and I'm not picking on fib traders, a good friend of mine is a fib trader. But you'll get people on forums arguing about strategies and methodologies and such. You know, why? You know, are you going to... So this was a 38 0.2% retracement. It actually fudged it, came up shy of a 50% retracement. Well, if you were waiting for a 50% retracement, if you threw your sell order in here at the 50% level, you would have came up short. The market would not have engaged your order. That's why I prefer just to try to get a handle on what the market is doing, who is in control of the market. If I'm not ready to trade, I'm not going to take a trade. Remember, trading is not about frequency. It's about being right. You want to take a high quality signal that you can have some confidence in. And like I say, that'll be true for anything trading related. Well, not much going on in the soybean pit this morning. Actually, since that initial move in the NQ, there's not been much going on anywhere. We did get a trend change signal here in soybeans, but you can see, well, actually, I suppose Thursday was a fairly active day, or pardon me, Friday was a fairly active day for soybeans. Monday, not so much. Oh, sorry, Monday. Tuesday, not so much. Feels like Monday today. This was the overnight here from Monday going into Tuesday morning. And here too, a market very much range bound. Unless I get a really solid signal that I may want to try, the best course of action here is to wait for the breakout, get that retest, and then look to buy or sell it accordingly. Anything else in here is literally a crapshoot. A trading friend of mine used to refer to areas like this as the abattoir. For those of you who are rusty on your French, abattoir means slaughterhouse. Not a good place to be. Okay, Jim says the banking index just made a higher low, so maybe early signs of support. I wouldn't get too aggressive to the buy side, not yet. It's not to say the market doesn't have a ton of room to retrace, but I think we're pretty much in a bear session today. Just trying to figure out the next best place to get in. We had, sorry, I was going to say it was a late filter entry signal. It was not a late filter. Our trend line went out of sync, but it did come back with a trend change signal here. So the filter went out of sync, trend line went out of sync, goes from green to red, comes back, everything is all red. There was a decent sell signal there. This was a late filter entry signal. The filter goes out of sync, trend line does not. Very high probability signal on the Falcon. Might as well shoot a trend line across the top here. And why don't we do one across the bottom also? I like it when my trend lines make a bit of a channel. This shows it's a strong market formation, and it will show you very quickly when prices start to shallow and perhaps head higher. And if they keep heading higher and they break, even if they break just a little bit like that, that's a sign that the market could be getting ready to head higher. Likewise, if the market continues lower and breaks the trend line here, even by a little bit, and not by one tick, but a little bit like that, that's actually a sign of weakness, or pardon me, strength, weakness as to the current trend, and you might also anticipate prices to head higher from there. So that's what I'm looking out for at the moment. Should have taken that signal there. There was enough room for a decent profit move on that one. Oh well, we'll get another chance here. I'm not worried. Like good old Alfred E. Newman used to say, "What? Me worry?" Oh, very nice with trend signal here on the Eagle. Where was I looking that I missed this one? So a nice little soft edge bounce, everything in sync. That was a very solid signal right there. Since we're just watching and waiting, let's see if the trade hit our profit objective. Look at that. Just hit it right on the money. And now they're starting to reverse. So there was just enough room in here that you could have realized a profit before encountering the trend line and possible support that might come with it. And again, there's nothing magical about trend lines. They're more a visual aid than anything, but they do give you a feel sometimes for what might be going on. Now I'm debating here. We've got a macro pullback signal brewing. And possible late filter entry, both of which are high probability signals. My concern is the market's come a long ways. Not to say that it can't head any lower here. A little bit of a lack of commitment at the moment. So they're humming and hawing, trying to figure out which way the wind is blowing. I would dearly like to see this bar turn green to eliminate any temptation to sell it. Just take the pressure off. Oh, nicely done, Ricardo. Ricardo says, nice day, Eric. 112 ticks on the NQ. Well done. That's fantastic. Using the Raptor on 6-tick bars. Done for the day. See you tomorrow. All right, Ricardo. Have yourself a great day. That's a fantastic start to the day. Well done. 112 ticks. Okay, Richard says he's having trouble logging on to my site. Richard, I'm going to give you the webmaster's email address so that you can email her directly. And I will let her know to expect your email. Okay, just sent her a message that she'll expect a message from you. Frank's asking an interesting question. Eric, would it be beneficial to load the Raptor cloud on all my charts? Well, you don't need to load it on the Eagle because you would be duplicating the cloud. The Raptor cloud is actually the Eagle cloud. It's been borrowed. That's the Eagle element on the Raptor. You could, but you know, Frank, it's the same old thing as before. It's not having more information on your charts that's going to help you become a better trader. If the Raptor Cloud helps you make a decision, then yes, by all means, put it on your other charts. So let's go here to the Hawk, and where's my Raptor Cloud? And well, what the heck, I'll leave it at 12. I'll put it on. Oh, sorry, I didn't push the right button. Let's try that again. There we go. Boy, I'm bogging my poor computer down. Smoke's going to be coming out of the tower here in a moment. All right, so here's the Raptor Cloud placed on the Hawk. If this helps you make a decision, then yes, by all means, leave it on there. If it does not, however, get rid of it. If it starts making you second guess your signals, get rid of it. Getting a green bar sell here in the NQ. And that might be actually occurring near the top of this trend channel that we were looking at earlier. And that's true for anything that you can add to your charts. You know, the DTS system is a very robust system. I've shared with you before how, you know, I've worked with people, one fellow in particular, he was just crazy about Bollinger Bands. Had to have Bollinger Bands on everything. He said, can I put Bollinger Bands on DTS? Yes, absolutely you can. If it helps you make a decision, then put Bollinger Bands on. Are Bollinger Bands going to prevent you from never taking a losing trade? No. If they would, I would have Bollinger Bands on my charts. But it's always the same old story, right? If this helps you make a decision, then by all means put it on. I know Mike Filigera, he likes to watch fast stochastics of all things. Why you would want to watch fast stochastics is beyond me. But Mike likes it. It helps him. He feels it helps him. You know, is there anything to be gained by watching it? I don't know. You know, maybe let's get rid of the Bollingers here. Maybe, you know, maybe Mike looks at this green bar sell and he sees the fast stochastics come out of the oversold region. And so he feels better about selling it. Here we had a macro pullback signal, same thing. The fast stochastics is coming out of the overbought, oversold area. But I would be selling it because it's a macro pullback, not because fast stochastics are telling me so. But like I said, this is what works for Michael. This is what gives Mike some added confidence to take the signal. And probably because he's been watching fast stochastics forever and a day. Does that mean you need to put fast stochastics on? No. In fact, you're going to find that the more stuff you have on your chart, the more difficult it will be to make a trading decision. And believe it or not, making a decision, whether it's right or wrong, is the most important part of trading, or one of the most important parts of trading. Yes, you heard me correctly. Even making a wrong decision is an important part of trading. Not because it's wrong, but you need the ability to make a decision. There's so much stuff out there that will cloud your decision making. Okay, speaking of decision making, we're at the 7:30 mark, 10:30 in the East. This is the time of day where if there has been a pronounced trend in the day, and I think we can say we've had a pronounced trend today, that there's a reversal against the trend. Sometimes a little bit of profit taking going on. We'll see whether or not they actually make a move to the upside today. I'm not so keen on buying myself, not that I don't expect prices to perhaps recover somewhat. But if I've had a winning position in one direction, I tend to stay in that direction for the rest of the session. And so far we've gone, I guess, 5 for 5. We've had winning trade on each of the birds and our crude oil trade. Jim says, wow, ticks got above zero. I take it that the ticks have been smothered in the negative zone all morning. So the ticks have just turned slightly positive. And again, there's something else. Jim likes to watch the advanced decline and the tick and the banking index and that sort of thing. And all that sort of stuff helps him make a decision. Will it help you? No, not necessarily. I guess what I'm trying to say is that there really isn't a magic bullet other than the threefold principle that you need a good entry signal. And by good entry signal, not only does it need to be reliable, but it needs to be clear. We took great pains to try to make DTS as clear as possible. I know some days it seems clear as mud, but really there was a lot stripped off of the charts to make interpretation as clear as possible. Two, you need a way to manage your trade. You need to have stop strategies in place. Three, you need to have money management. And by money management, we're talking about not risking more than you can afford. Or perhaps, as we did the other day, just scaling into a position. Okay. Well done, Joe. Joe just locked his profits in on the E-mini. Well done. Jim says the NASDAQ a little bit stronger than the E-mini and the YM, which are making new lows on the day. Crude oil going a little bit more sideways again, bouncing off of their morning low. Let's bring crude oil over here. This is crude oil on the hawk. So you can see they bottomed out here this morning. The crude oil opened, actually crude oil opened down here, rallied up a little bit, came back down. So they're kind of sitting on their lows. Working on a possible first micro-macro cross signal. Oh, fantastic. Joe's knocking it out of the park. Had a runner, he says, for plus 30 ticks. Nicely done. That is a very good trade. Our Raptor giving us a double pullback type scenario. So we're into the cloud, double pullback, likely to encounter the hard edge. If it comes out of here with a signal, that could be a saleable signal. The easier opportunity was first thing this morning, though. where after the initial dust settled out, we saw the sellers take over and force the market lower. All right, here on the hawk, we're getting two green bar sells. We know these tend to develop toward the end of a trend. The green bar sell is a signal which we can actually trade counter trend. It is our counter trend signal on the hawk. Now, you don't need to trade it counter trend. A lot of times you can just use it as an early warning, but we're in a demonstration room, so I might as well demonstrate for you. When you are anticipating a trend reversal, it's important that you cover your trade as deep as possible. Why? Well, because if this market is not finished testing these lows, you want to be below the extreme. If it's going to continue to test the extreme, you want to be below the extreme. Now, the green bar sell signal, or buying the failure of the green bar sell signal, like I said, this will often develop into a first micro macro cross to the upside. So there isn't always a lot of rush to get into this type of trade. And this is clearly a counter trend signal today. Could see a little bit of a hop back maybe to, oh, I don't know, 4,500. The market loves even numbers, but I'm not sure it would get that high. 4,490 might be a more plausible target. Counter trend trades, though, I'm almost always in and out. If you're going to rally, go ahead, give me my profit, and I will thank you on my way to the bank. Interesting. And here again, Joe's offering a little something that he likes to do. And, you know, I think there's something to be said for making the system your own as well. But Joe says he's been back testing, taking his trade on a tick chart so he can let his runner run. He says, I get stopped out quite often when I let the runner run on a mean Renko chart. So long as it's working, go with it. I suppose I keep belaboring the point because I see it so often. When people come to me for coaching or advice, they're almost always micromanaging their trades. They're almost always looking elsewhere, sometimes after taking one or two losing trades. It's almost as though they never expect to take a losing trade ever. I wish it worked that way, but it doesn't. A good question here from Frank. Frank asks, does the time it take to complete a bar indicate a struggle, so you should wait to see who wins? Yes And no, a longer bar, like we've been waiting for these bars here to print for, let's see, how long did it take for that bar to print right there? Oh, that one wasn't so bad. So from 40 to 42, that was only, these are only about 2-minute bars. They seem longer. Yes, you are correct that when the market seems to be taking a lot of time to print a bar, there is definitely a struggle going on. Sometimes it's just the apathy that traders aren't sure which way to take a position, so they're sitting on the sidelines. That doesn't mean that you need to sit on the sidelines if you have a tradable signal. One thing that you'll find with DTS is that it will produce a signal often before the market knows what it wants to do. It's because DTS is designed to try to read the underlying market pressure, right? It doesn't necessarily look at what the current bar is doing. It's looking at what all the other bars have been doing. Which way is momentum going? What has the price action been? And it will generate signals based on that. But yes, you're absolutely correct that a slow market or a market that seems to be laboring printing bars there is a struggle going on, but I don't necessarily wait for the bar to print if I already have a tradable signal. And this counter trend signal is very much an aggressive trade. Like I said, these green bar buy failures will inevitably build into a first micro macro cross if the market is in fact heading higher. But there wasn't much going on, so I thought I might as well show you this. But that's a really good question, Frank. I really like that question. I want to come back here to the Falcon because you can see now from our trend line how we've started to shallow out here. So that would suggest that, in fact, the market is getting a little bit stronger. Nice little bounce off of our support line. Kind of pinched between the two at the moment. Oh, I said 44.90. I'm just looking here. The hard edge on my Eagle is 44.88. And our first hour high and low, 44.86. So my eyeball at 44.90 may not have been a bad guess. Assuming, of course, we see this head a little bit higher. Oh, and this could account for the slowing in the trading. Joe is reminding me that Fed Fisher is speaking at 12:30 p.m. Eastern. So be careful around that time. That would be 9:30 Pacific, 12:30 Eastern. So it could be that the market is settling in a little bit in anticipation of that in the next hour and a half or so. But like I said, we've had a good morning so far. Remember, just a quick reminder while I think of it, tomorrow's session, which will be our Wednesday session, will be in the public trading room. So go to the other address. If you don't have the room address, I'm sorry, I don't have it, but Adam does. So you can email Adam@indicatorwarehouse.com and he will point you in the right direction. So it looks like the current lows still holding. Now they've really ground to a halt, haven't they? Wow. Our Raptor also going very sideways. We've established a little bit of a sideways channel here. If you were inclined, you could place buy and sell orders above and below it and let the market bring you in on a breakout higher or lower. Again, this is a more aggressive posture. These things are kind of dangerous when the market is slow because you start looking at, oh, what can I do? See how the ticks, the Geiger counter here keeps trading punches. Up a little bit, down a little bit, up a little bit, down a little bit. Soybeans dead flat today too. Crude oil kind of hitting the skids. Yeah, I think a lot of people are on hold waiting to see what might be coming. I really thought we would see a stronger move lower today. Well, stronger. We made a pretty substantial move lower already, I guess. Just looking for them to continue. This is a place where I could start to roll my stop if I wanted to, but because the market is starting to give me all these yellow bar clusters, I'm fairly confident that the market is still kind of moving sideways. And I should see the buyers press one more time. Of course, if I'm wrong, they're going to spank me down here. Oh, here they come. Oh dear. Okay. Come on, buyers. This, again, counter trend trades, right? The problem too with a counter trend trade that I find is if you get into a counter trend trade, you're stuck. Now, how do I take a with trend trade? See, now I'm getting a first micro macro cross signal, but I'm already long. Yes, I know I can reverse. That's why I tend not to get too excited about counter trend signals. Well, we'll let that one ride a little bit longer, see what comes of it. Now they've slowed down again. I think they're going to follow through. They might follow through on this first micro-macro cross signal now. It's the same thing as what we were looking at before. You know, when you know that the market is kind of stuck going sideways, sometimes you're better off just letting it get outside of this range. I do think it's going to head lower here. Let's go to Craig's question. Craig says, Eric, how do you use the OCO order on Trade Manager? All right, let's take a look. So let's say we're looking at the Falcon here, and we've got a bit of a sideways channel, and we want to use an OCO order. OCO standing for one cancels other. You click, and now when you use your OCO, it's going to default to this quantity up here. Your OCO order does not take into account the risk management portion of your Trade Manager. So you're going to click on here, and now you're going to right-click on your chart, and that will give you your order parameters. So I tend to place my orders away from the price and then bring it into the price action. If you have your stop enabled, Trade Manager will automatically give you a stop once you're filled. I don't believe you get your profit targets or break-evens, however. We'll see here in a moment. So the important thing to remember when you're using your OCO is to right-click on your chart. So you toggle it on, and you can enter as many OCO orders as you want. And you see they're always characterized by OCO 2. Now notice the other OCO canceled. Trade Manager gave us a stop. Oh, actually it did give us our break even. If I cancel the one OCO, the other automatically cancels. So Trade Manager will give us our break even, but it does not give us our profit target. All right, so that first micro-macro cross signal here did eventually work out. And, well, you can see the evils of trying to take a counter-trend trade firsthand. We don't have the OCO function here on the Raptor, so if you're going to bracket a trade that way, you need to remember to cancel your other order. But this was a nice little signal. You can see it pulled back to the top end of the channel, continued to honor it, produced a signal, a trend change signal. And so far, well, at least it's allowed us to get our trade to break even. Joe says, Eric, I find the missed trades hurt more sometimes. Do you have an idea why? Yes. Because trading is difficult, and when you miss a profitable trade, you feel the pain of the missed opportunity, of course. Same reason trading in hindsight is so gratifying, because you can see how smart you are. You're always taking a chance when you're trading, of course. And I'm not telling you guys anything you don't know. Oh, darn, backed up a little bit too much. See, now notice we got the breakout, we're getting the retest. This isn't a typical hawk signal that we would take. In other words, it's not a 4-arrow consolidation. It's not a macro pullback, at least not yet. It's not a first micro-macro cross signal. But it would be kind of tempting to take this one just based on the retest. Yeah, you got to know when to quit. Joe makes a good point here. He says, Joe writes, now I'm looking at the Russell go without me. I'm done for the day, need to help a friend move some stuff, and do not want to revenge trade. How true. You know, knowing when to stop on the day sometimes is just as important as knowing when to take a trade. Like our best opportunities came early today, right? Trading is not like real work in that in real work, the more effort you put into it, the greater results you see. Trading is not like that at all. Your job as a trader, and you can put this on a sign and hang it in your office. Your job as a trader is to take what the market is giving you. That's it. That's all you can do. You cannot make the market give you anything. But if the market signals that it might be ready to give you something, well, then it's your job to take it. And that is your job description as a trader. That and get good at wringing your hands when the trade is moving against you. All right, you guys, I think we're going to shut the room down a few moments early here. We're not really seeing a whole lot more follow through. I think the market might be dragging its feet a little bit until that announcement in the next hour, and we're getting almost into the lunch hour also. So we're going to button up the room. Remember, tomorrow's room is the public room, and I will see you guys then. Have yourselves a wonderful day. Talk to you later.